Right. So today we're going to be taking a deep dive into Block Inc.'s 2024 proxy statement.
Yeah.
This document, it's really a window into their operations, their goals, their challenges, and really, I think the overall story that comes out of it is this ambition to become the ultimate financial one-stop shop.
Yeah, it's really interesting.
Right. But the big question is, can they actually pull it off?
Right.
Especially in this really rapidly changing and competitive landscape.
Yeah, and what's fascinating to me is that they're going way beyond just payment processing.
Right.
You know, they're aiming to build what they call an ecosystem of ecosystems. It's really a strategy for resilience, but it's also creating this network effect across all their services.
Okay, I like that ecosystem of ecosystems.
Right.
Can you give an example of how that actually plays out for like a user?
Yeah, so imagine a small business owner.
Okay.
They're using Square's point of sale system.
Yeah.
Now, you integrate that with their payroll product and Cash App.
Yeah.
Suddenly, they have this streamlined system for managing sales, employee payments, customer transactions,
Right.
all within Block's ecosystem.
Wow.
That's powerful, not just for Block, but for the business owner, too.
Yeah, I mean, it's not just convenience. It's creating real value for each user,
Right.
whether they're a business or an individual.
Exactly.
Now, I'm curious about the minds behind this whole strategy.
Yeah.
The leadership,
Yeah.
the board of directors.
Well, you've got heavy hitters like Jack Dorsey, of course.
Of course.
But what's really interesting to me is the mix of experience they've assembled.
Okay, tell me more about that.
So you have Sharon Rothstein, former COO of Afterpay.
Right.
She brings deep knowledge of the buy now, pay later space.
Which is huge for them.
Huge growth area for Block.
Yeah.
And then you have Paul Dayton, who chaired both Goldman Sachs International and the Economist Group.
Wow.
That's a blend of hardcore finance with a global perspective.
For sure.
Each board member brings something unique to the table, guiding Block's direction.
Right. And that raises the question in my mind.
Yeah.
Is this the A-team that can really take Block to the next level?
We'll see.
Now, all this ambition to be this financial hub
Yeah.
also comes with a lot of responsibility, right?
Huge responsibility.
So what is Block doing in terms of ESG and corporate responsibility? Are they walking the walk or just talking the talk?
I think they're putting their money where their mouth is, at least to some extent.
Okay.
They invested $100 million
Wow.
in minority and underserved communities,
Okay.
including the first Australians Capital Catalytic Impact Fund. That's a substantial commitment, but some might say it's not enough given their size and resources.
Sure. And that's definitely something to keep an eye on as they continue to grow.
For sure.
But in this digital age, you can't talk about responsibility without talking about data privacy and cybersecurity.
Yeah, it's paramount.
So what's Block's approach to keeping user data safe?
They've adopted this kind of multi-layered approach.
Okay.
So you've got board oversight, but also dedicated roles like the chief information security officer or a chief privacy officer,
Right.
regular audits, mandatory employee training.
So it sounds like they're building a pretty solid fortress around user data.
They're certainly trying to, but here's the thing.
Yeah.
No fortress is impenetrable.
That's true.
And Block acknowledges this in the statement.
Yeah.
They highlight cybersecurity threats as a major risk factor,
Okay.
which raises the question for me.
Okay.
Are they being overly cautious, or are we underestimating the potential fallout from a data breach?
In the financial world.
In the financial world.
Right.
Yeah.
That's a really thought-provoking question.
It is.
Because that could have huge implications for Block and its users.
Exactly.
So while they're projecting this image of a secure, all-encompassing financial ecosystem,
Yeah,
they're also admitting they're not immune to risks.
that's right.
So what other challenges are they facing according to the proxy statement?
Well, one of the biggest hurdles they highlight is regulatory scrutiny, particularly in lending and buy now, pay later services.
Right.
It's a rapidly evolving landscape. Navigating those complexities is crucial for them.
Yeah. And we have a real-world example playing out right now, right?
Oh, yeah.
The Consumer Financial Protection Bureau's investigation into Cash App handling of customer disputes.
Exactly. And this highlights the regulatory risks all BNPL companies face, including Block.
Absolutely. So it's not just about building a great product or service.
It's table stakes at this point.
Right. It's about playing by the rules in a constantly changing environment.
Yep. And let's not forget the elephant in the room competition.
Oh, yeah, of course.
Block operates in a cutthroat market. You've got established giants like PayPal.
Right.
And this constant influx of innovative startups vying for a piece of the pie.
It's a dog-eat-dog world out there.
That is.
But amidst all this competition and these regulatory hurdles,
Yeah.
Block is still making some bold moves.
Oh, yeah, they are.
And one of the things that really stood out to me in this proxy statement was their executive compensation philosophy.
Mm-hmm.
It really emphasized market competitiveness,
Right.
but with a really strong focus on performance-driven rewards, primarily through equity.
Yeah.
Now, this no-cash compensation policy for executives in 2023,
Mm-hmm.
I don't know, what do you think? Is this a genuine commitment to long-term growth, or is this a PR move?
It's hard to say for sure, but it certainly signals a focus on shareholder value as the ultimate measure of success.
Right.
It's a gamble, though.
Yeah.
Will it attract and retain top talent in such a competitive market? That remains to be seen.
So even with this bold compensation strategy, they're facing pressure on multiple fronts.
They are.
But to really understand their chances of success, I think we need to look under the hood.
Let's do it.
Let's dive into their financial performance and see what the numbers reveal about their health and their ability to achieve this grand vision.
I'm ready. All right, so let's get into the nitty-gritty of Block's financial performance.
Okay.
Starting with their revenue growth, which is, really a key indicator of their overall health and the success of this ecosystem strategy.
Right. So are they living up to the hype?
Yeah.
Is the revenue actually climbing?
Well, for the year ending December 31st, 2023,
Okay.
Block reported a total revenue of over $14.6 billion.
Wow.
That's a 33% jump from the previous year.
Okay.
So, yes, their revenue is definitely on an upward trajectory.
That's a significant increase.
It is.
But revenue is only part of the story.
Right.
Are they actually making a profit?
Yeah.
Can they sustain this growth without burning through cash?
Well, their gross profit for the same period was over $4.3 billion.
Okay.
Also showing a 33% increase.
So they're not just growing their top line, they're improving their bottom line as well.
Exactly.
Okay. So far, so good.
So far, so good.
But we can't ignore the Bitcoin factor here.
The elephant in the room.
Block has been a vocal supporter of Bitcoin,
Huge supporter.
even integrating it into their Cash App.
Right.
So how is this crypto bet impacting their financials?
Well, Bitcoin has definitely played a role in Cash App's success, driving both revenue and user growth.
Mm-hmm.
But it's important to note that while Bitcoin revenue contributes significantly to Cash App's top line, its contribution to gross profit is relatively smaller due to the cost associated with Bitcoin transactions.
I see. So while Bitcoin is generating buzz and attracting users, it's not necessarily translating to huge profits just yet.
Not yet.
But they're clearly in it for the long haul.
Yeah.
I mean, they're holding a significant amount of Bitcoin on their balance sheet.
Oh, yeah. As of December 31st, 2023, they held over 8,000 Bitcoins.
Wow.
Valued at almost $340 million.
Okay.
And they didn't buy or sell any Bitcoin during 2023.
Interesting.
Suggesting they're really sticking to their long-term investment strategy.
It's a risky move, for sure, given Bitcoin's volatility.
A volatile asset.
But it also shows their commitment to the future of cryptocurrency.
Yeah, they're all in.
Okay, so Bitcoin aside, how is Block funding its operations and these growth initiatives?
Yeah.
Are they relying heavily on debt?
They have a diversified approach to financing.
Okay.
They utilize a mix of senior unsecured notes, convertible notes, and warehouse funding facilities.
Okay, break it down for me. What are the pros and cons of each type of debt?
Sure. So senior unsecured notes offer the advantage of relatively low fixed interest rates.
Oh.
However, they come with refinancing risk down the line when they mature.
Makes sense.
Convertible notes attract a different type of investor, offering potential upside through conversion to stock.
Okay.
But they also carry the risk of dilution for existing shareholders.
Right, and those warehouse funding facilities are a bit more complex.
Yeah, those are essentially revolving credit lines secured by consumer receivables.
Okay.
Providing Block with the flexibility to fund their buy now, pay later offerings.
Right.
But these facilities are typically subject to variable interest rates.
Okay.
So if rates climb, so do Block's borrowing costs.
So they're juggling different types of debt,
Yeah,
each with its own set of advantages and risks.
exactly. It's a balancing act.
Yeah, it sounds like a balancing act.
And it's not just about managing the debt itself, it's about managing the overall leverage.
Okay.
The ratio of debt to equity.
Right.
Too much debt can increase financial risk,
Sure.
making the company vulnerable to economic downturns or changes in interest rates.
So while debt can be a powerful tool for growth, it needs to be handled carefully.
Very carefully. It's a double-edged sword.
Right.
And Block acknowledges these risks in their proxy statement. highlighting interest rate refinancing risk
Okay.
and the overall level of leverage as potential challenges.
All right, so we've covered revenue profitability and how Block is funding its operations.
Yep.
Now let's talk about how they actually recognize that revenue.
Okay.
The rules they follow to record it in their books.
Yeah.
I know this can be a bit dry,
It can.
but it's important because it gives us insight into the quality of their earnings.
It does. It's the foundation.
Right.
So Block generates revenue from various sources: transaction fees, subscription fees, interest income, and of course, Bitcoin sales.
Okay.
And they have specific accounting policies for each of these revenue streams.
Okay, let's start with transaction fees.
Right.
This is their bread and butter.
Yeah.
The money they make from processing payments for sellers using Square.
Mm-hmm.
So how do they recognize that revenue?
So for transaction fees, Block recognizes revenue on a gross basis when the payment is processed.
Okay.
This means they record the full amount of the transaction fee as revenue, even though they deduct a portion of that fee to cover cost, like processing fees and bank settlements.
So they're acting as the principal in these transactions,
Exactly.
taking on the responsibility and the risk associated with processing those payments.
That's right.
Okay, now for subscription fees, which they earn from services like Square Payroll or Tidal.
Yep.
How do they recognize that revenue?
They recognize revenue ratably over the subscription period.
Okay,
So a portion of the subscription fee is recognized each month.
makes sense, reflecting the ongoing service provided.
Yep.
Okay, what about the interest income they earn from loans and other financial products?
Well, for interest income, they generally use the effective interest method,
Yep.
which is a standard accounting practice.
Right.
This means they recognize interest income as it accrues over the life of the loan,
Okay,
based on the outstanding principal and the effective interest rate.
so that's transaction fees, subscriptions, and interest income.
Yeah.
Now let's talk about Bitcoin.
All right. Bitcoin.
They're recognizing revenue from selling Bitcoin to Cash App users, right?
Right.
How does that work?
So for Bitcoin sales, Block recognizes revenue on a net basis.
Okay.
This means they record the difference between the price they sell Bitcoin to customers and the price they paid to acquire it.
So essentially, they're recognizing the profit they make on each Bitcoin sale.
Exactly.
That's a different approach than they use for transaction fees.
It is.
Why the distinction?
It's because with Bitcoin, Sales Block is acting as an intermediary,
Okay.
facilitating the buying and selling of Bitcoin.
Right.
They're not the principal in the transaction as they are with payment processing.
I see. So the way they recognize revenue depends on their role in the transaction.
Exactly.
It seems like they're applying different accounting methods to kind of paint this nuanced picture of their financial performance.
They are. It's very nuanced.
Yeah.
And it's important to note that these policies are in line with generally accepted accounting principles.
Okay, good to know.
Yeah.
All right, so we've covered revenue debt and even the nuances of revenue recognition. But there's another area I want to explore.
Okay.
Related party transactions.
Ooh, yeah.
Always a sensitive topic
Always.
because they can raise questions about conflicts of interest.
For sure.
So Block has a few of these transactions disclosed in their proxy statement, right?
They do.
What are some examples?
One notable example involves a lease agreement for office space
Okay.
with an affiliate of Jim McKelvey,
Okay.
who is one of Block's co-founders and a board member.
Right, so that definitely has the potential for a conflict of interest.
It does.
How do they address that?
They've been transparent about the terms of the lease agreement,
Go.
including the lease term rent payments, any options for extension.
Right.
And importantly, they also state that the lease was approved by Block's Audit and Risk Committee,
Okay.
which is made up of independent directors.
So there's a layer of oversight there to ensure that a transaction is fair
Right.
and in the best interest of the company.
Exactly.
Are there any other related party transactions we should be aware of?
They also disclose transactions involving certain charitable organizations
Okay.
affiliated with their executives or directors.
Right.
These are typically donations or grants to support those organizations.
Again, that's an area where conflicts of interest could arise.
Absolutely. But they're transparent about the amounts involved
Okay.
and state that the donations or grants were approved by either the board of directors or a designated committee.
So it seems like they're trying to be open about these related party transactions
They are.
and demonstrate that they're handling them responsibly.
Yeah, I think that's the goal.
Yeah.
But it's still worth noting that even with oversight,
Right?
these types of transactions can be tricky.
Yeah.
It's something investors should keep an eye on.
Agreed. All right, let's shift gears and talk about the future.
Okay. The future.
What's Block's growth strategy?
Mm-hmm.
How are they planning to become that one-stop financial shop they're envisioning?
Their growth strategy is multifaceted. Organically, they're investing heavily in product development,
Okay.
constantly enhancing their existing offerings,
Mm-hmm.
introducing new products and services to stay ahead of the curve.
So innovation is key.
Innovation is key.
But are they just focusing on the U.S. market, or are they looking to expand globally?
Global expansion is definitely on their radar.
Okay.
They're strategically targeting markets where they see high growth potential
Right.
and tailoring their products and services to fit local needs and regulations.
But going global can be a risky endeavor.
Oh, absolutely.
What are some of the challenges they might face?
Well, they face challenges like navigating different regulatory environments,
Right.
understanding local consumer preferences, and even dealing with currency fluctuations.
So it sounds like they're trying to strike a balance between ambitious growth
Yeah,
and careful risk management.
walking the tightrope.
Right. But organic growth is only one part of the equation.
Right.
They've also been quite active on the acquisition front.
Oh, very active.
Right. So talk to me about that.
Acquisitions are a key part of their growth strategy.
Okay.
We've already discussed the Afterpay acquisition,
Right.
which was a major move in the buy now, pay later space.
Huge.
But they've also acquired companies like Tidal, the music streaming service,
Right.
and Weebly, the website building platform.
So it seems like they're casting a wide net,
Yeah,
trying to bring all these different services under the Block umbrella.
exactly. Create that ecosystem.
Right. But acquisitions can be risky too.
They can be very risky.
How are they ensuring they're getting a good return on these investments?
Well, they have a rigorous due diligence process
Okay.
to evaluate potential acquisitions, looking at factors like financial performance, strategic fit,
Okay.
and potential synergies.
But integration is key.
Right? Integration is sort of
Successfully merging different company cultures and operations,
very difficult.
it can be tricky.
Yeah, it's a big challenge.
So it's not just about buying the right companies.
Nope.
It's about integrating them effectively
Yeah.
to really maximize their value.
Exactly.
Now, growth isn't just about profits, though.
Right.
It's also about responsible business practices.
It is.
So what's Block doing in terms of environmental, social, and governance factors?
Yeah, the ESG stuff.
The ESG stuff.
ESG is becoming increasingly important for investors.
Right.
And Block seems to be taking it seriously.
Right.
They've implemented a comprehensive ESG program
Okay.
that addresses issues like climate change,
Okay.
diversity and inclusion, community engagement, and ethical sourcing.
So give me some specifics. What are they doing to reduce their environmental footprint?
So they've set goals to reduce their greenhouse gas emissions,
Okay.
both from their own operations and their supply chain. They're investing in renewable energy
Okay.
and supporting initiatives to promote clean technology and sustainable practices.
So they're trying to be a responsible corporate citizen
They are.
when it comes to environmental issues.
Yeah.
What about social issues?
Okay.
How are they addressing diversity and inclusion within their company and in the communities they serve?
Well, they've implemented programs to increase representation of underrepresented groups at all levels of the company and have set specific goals to measure their progress.
Good.
They're also investing in initiatives to support minority-owned businesses
Okay.
and promote financial inclusion in underserved communities.
It sounds like they're making an effort to walk the walk
They are.
when it comes to diversity and inclusion.
Absolutely.
What about community engagement?
Yeah.
How are they giving back to the communities where they operate?
Their community engagement programs are focused on supporting organizations
Okay.
that promote economic empowerment, financial literacy, and access to opportunity.
Right.
They also encourage employee volunteerism
Okay.
and offer matching gift programs to amplify their impact.
So they're putting their money and their time where their mouth is. They are. What about ethical sourcing?
Okay.
How are they ensuring that their supply chain is responsible and sustainable?
They have a supplier code of conduct
Okay.
that outlines their expectations for ethical business practices, including fair labor standards, environmental protection, and human rights.
Right.
They're also working to increase transparency and traceability in their supply chains,
Okay.
ensuring that their products and services are sourced responsibly and ethically.
So they're taking a holistic approach to ESG,
They are.
addressing a range of environmental, social, and governance factors.
Yeah, ticking all the boxes.
Right. But let's face it, no business is without risk.
No business is risk-free.
What are some of the key risks Block acknowledges in this proxy statement?
Okay.
And how are they managing those risks?
So they face a wide range of risks, including operational risks, financial risks, regulatory risks, and reputational risks.
Okay, let's start with operational risks.
All right, operational risks.
What are some of the key concerns they highlight?
One of the biggest operational risks they face is the possibility of system failures or outages.
Right.
Their platforms rely heavily on technology,
Sure.
and any disruption could have a significant impact on their ability to process payments, provide services,
Right.
and maintain customer trust.
And they've experienced outages in the past, right?
They have.
Which have caused disruptions for their users.
Yeah, it happens.
Yeah.
And they acknowledge that future outages are possible. Despite their best efforts to maintain robust systems and backup infrastructure.
It's a constant battle.
It is.
To keep these complex systems running smoothly.
Yeah, especially as their user base grows.
Right. What about cybersecurity?
Cybersecurity is a major concern for any company operating in the digital space.
For sure.
And Block is no exception. They highlight the risk of cyber attacks and data breaches,
Right.
acknowledging that hackers are constantly seeking to exploit vulnerabilities.
So they're investing heavily in cybersecurity measures.
They are.
But it's a never-ending arms race.
The threat landscape is constantly evolving.
Yeah.
And they have to stay one step ahead to protect their systems and customer data.
Okay, so operational risks are significant.
Significant.
What about financial risks? What keeps them up at night?
Well, one of their biggest financial risks is credit risk,
Okay.
especially related to their lending and buy now, pay later operations. They're extending credit to both sellers and consumers.
Right.
And there's always the risk that some borrowers might default on their obligations.
So they're essentially acting as a lender,
They are.
which comes with inherent risks.
Inherent risks.
How are they managing that risk?
They're using sophisticated risk management models and data analytics to assess creditworthiness and manage their credit exposure.
Okay.
But they also acknowledge that credit losses are inevitable in any lending business.
Right.
It's a delicate balance between expanding access to credit
Yeah.
and managing the associated risks.
What about other financial risks?
Well, they're also exposed to market risks,
Okay.
like fluctuations in interest rates and foreign exchange rates,
Right.
which can impact their earnings and financial position.
Okay.
They use hedging strategies to mitigate some of these risks,
Well,
but they acknowledge that these strategies may not completely eliminate their exposure.
All right, so they're facing operational risks, financial risks.
Yep.
What about regulatory risks?
Yes. The regulatory landscape Block operates in a highly regulated industry,
For sure.
subject to a complex web of laws and regulations related to payment processing, money transmission lending, data privacy, and consumer protection.
It sounds like a compliance nightmare.
It can be a bit of a headache, and they acknowledge that changes in laws or regulations or even just their interpretation or enforcement could significantly impact their business.
So staying on top of regulatory changes is crucial for their success.
It's mission critical.
Yeah.
And then there's the ever-present risk of regulatory scrutiny and investigations,
Right.
as we saw with the Consumer Financial Protection Bureau's investigation into Cash App.
That was a wake-up call for them,
It was.
reminding them that they're under the microscope.
Yeah, Big Brother is watching.
So they're investing in compliance expertise and resources
Yeah.
to ensure they're meeting their obligation and navigating this complex regulatory landscape.
It's amazing.
So we're juggling operational risks, financial risks, regulatory risks, anything else.
Well, there's one more risk that's often overlooked,
Sorry.
but it can be just as damaging: reputational risk.
Oh, yeah. Reputation is everything,
It is.
especially in the financial world.
Especially in finance.
Right.
Block acknowledges that any negative publicity...
Or perception of their brand could harm their business.
Okay.
They're particularly sensitive to issues related to data privacy, security, and ethical business practices,
Of course.
as any missteps in these areas could erode customer confidence and lead to reputational damage.
And we can't forget about their association with Bitcoin,
Yeah,
which has had its share of controversy and volatility.
it has been a roller coaster.
Right.
That association could expose them to reputational risks.
Sure.
If Bitcoin were to face a major downturn,
Right.
or if there were to be increased regulatory scrutiny of the cryptocurrency market.
So managing their reputation is just as important as managing their financials
Absolutely.
and their operations.
It's all connected.
Right. They're prioritizing transparency, ethical conduct, and proactive communication with stakeholders to protect their reputation and maintain customer trust. Right. It's about building that trust. It's a valuable resource for anyone who wants to understand Block's journey and assess their prospects for success. But looking ahead, I think there's a bigger question we need to consider.
Oh, I'm all ears.
Yeah.
What's this bigger question that's on your mind?
Well, as Block expands globally and becomes, more deeply embedded in the financial lives of individuals and businesses, how will they balance this rapid innovation with the need for responsible and ethical business practices?
Right.
Can they be a disruptive force for good, or will they succumb to the same pressures and temptations that have plagued other financial giants?
That's a really thought-provoking question. It's easy to get caught up in the excitement of new technologies and the potential for growth.
It is.
But we can't forget the importance of ethics and responsibility, especially in the financial world.
Exactly. And this proxy statement, while it's packed with, financial data and strategic plans, it also offers glimpses into Block's approach to these broader issues.
Yeah.
We've talked about their ESG initiatives, their commitment to data privacy, their stance on political contributions.
Right.
These are all pieces of the puzzle.
But it's an ongoing process, right?
Absolutely.
I mean, they're not going to achieve perfect ethical balance overnight.
No, and the stakes are high.
Yeah.
As they grow, they'll face increased scrutiny from regulators, investors, and the public.
For sure.
Their decisions will have a ripple effect, impacting not just their own bottom line, but also the lives of their users and the communities they serve.
So it's not just about building a successful business.
Nope.
It's about building a responsible business, a business that's mindful of its impact on the world.
Exactly. And that's something we'll all be watching closely as Block's journey continues.
Well said. I think that's a perfect note. To end on this deep dive into Block's 2024 proxy statement has been a fascinating exploration of a company at a crossroads.
It has.
They're ambitious, they're innovative, and they're clearly committed to building something big. But they're also operating in a complex and challenging environment where the choices they make will have far-reaching consequences.
It's true.
And it's a reminder that the world of finance is more than just numbers and transactions.
Right.
It's about people values and the impact we have on each other.
Well said.
Well, thanks for joining me on this deep dive. I hope you found it informative and thought-provoking, and I encourage you to keep exploring, keep questioning, and keep holding companies like Block accountable for their actions.
It's been a pleasure. Until next time.